traders, let's take a look at two trades that I took on gold. So here, price headed to the 1 hour bullish order block, which is an overlap of the 4 hour bullish OB. So as it went to the extreme, I waited for mitigation of opposing imbalances. So afterwards, when price mitigated it, it came down, enter for buys. Yeah. So yeah, I actually expected price to head towards this 5-minute bullish OB, right? Probably to sweep the low of this candle resting inside of the 5-minute bullish OP, but instead it created a bullish fair value gap and retested, so I entered around this area, right? And yeah, price eventually did the lower time frame sell side sweep inside of this 5-minute bearish fair value gap before pumping all the way up. And I noticed and I realized the fact that this should be a short-term trade, because as we reach this point of interest, or even this POI here, price will start to consolidate, as we can see here. What happened is it consolidated, because this price action here is not as strong, right? Because for price to move by a huge amount of pips, right, it has to really sweep 4-hour candles low or a daily candle low, then price will really explode. But here we can see that there are a few imbalances here and there, right? This order block has not been mitigated yet, which you see actually price came up here to mitigate this extreme OB, right, before dumping down, right? So all these POIs weren't even mitigated yet, so this should be really a short-term trade, right? So as when price created this bullish candle, right, then I know that we should quickly take profit already, right, to minimize our risk. Yeah. So, and also here you can see, is there any sell side sweep here? Not really, right? There's just a lot of wicks here, right? But yeah, so I would say this is not really a high entry model. It's probably like a B setup. Yeah, that's why I risked lesser also. Yeah, and further down the road, when it was at the optimal timing at 9:30 p.m. when New York session opened, price was close to the 4-hour bearish OB, so I decided to look for shorts, right? So when price, so I saw this 5-minute bearish upturn, okay, and I waited for this 5-minute bullish order block to be mitigated, right, before entering. So what you can see is the 5-minute bullish order block actually held and propelled price upwards, right? So main problem is looking at 5-minute time frame, right, in a 4-hour bearish order block. So there was really no reason to do that. Okay, yeah. So minimally we should be looking for 15-minute sharp turn. Okay, so in this case we got taken out simply just by looking at a time frame that is 3 times slower than what we should have been looking out for. And also, if we were to be looking on the 5 minutes, right, as price did this when we tested, right, we should have waited for it to retest the extreme OB. But as you can see, during the retest, it created a 5-minute bullish fair value gap overlapping the 5-minute bearish order block, which means that price is gonna head upwards. Yeah, so main thing is looking at the wrong time frame, right? So as you can see on the 15-minute, right, usually on the 1 hour, right? Let's say 1 hour bullish fair value gap overlap. Yeah. So price retested the order block before shooting all the way up, and right now it's going up. So the main thing is to be patient. Right, this was really a rush trade because I really wanted to take a trade at 9:30. So as you can see, you can never know when the order block will go, because here there's multiple tests of the order block, and also it's not really completely mitigated. So you really won't know whether the order block will actually hold because it has not been fully mitigated, or it will not hold because it has already been mitigated, right? So you wouldn't know. So you we should just wait for price action to play out. Okay, and yeah, by looking on the 5 minutes, we got taken out. So yeah, it should be on the correct time frame so that we know what price is doing, and we won't be, you know, induced by this smaller time frame price action.